Peter Krauth noted that the registered silver, which is the metal that is available for delivery, has declined by about 70% over the last 3 or 4 years. And in his view, it won't be too long before there's no more silver out there. If I had to guess, I would say maybe a year, 18 months, 2 years max, Krauth said on the sidelines of the event. And I quote, "At some point, there will be no more secondary silver available. Someone's going to stand for delivery on a futures contract and they will be told, sorry, we can't deliver, we're going to have to pay you out in cash." And he believes that's when the entire sector will finally wake up in a big way.
Connection established.
Folks, we did it. We officially have hit 100,000 subscribers. I cannot thank you all enough. I'm going to save the thank yous and heartfelt messages for another video. I want to dive into something that was posted yesterday from NASDAQ.com, an interview with Peter Krauth, and he dives into the silver supply deficit and mentions some very important statistics and his thoughts on why the price hasn't moved yet. And I agree with a lot of what he has to say. If you frequent my channel, I've been mentioning I feel silver's price will break out by the year 2025, 2026. And in this article, you could see he says, and I quote, "If I had to guess, I would say maybe a year, 18 months, 2 years max." That is always what I've been saying since 2019. You guys know, if you are longtime subscribers, I've been saying that specific year, 2025, 2026. I've been saying that for a long time now, and for the exact same reasons. I feel by then we will be deep enough into the silver shortage. I feel the COMEX corruption will no longer be able to exist by then. I think we'll be deep enough into the green new era, this new digital era, and silver's critical role it plays. And the suppression of price by then will not be able to sweep silver's true value under the rug, as big industry will realize we need a lot more silver, but there's not much left of it. Everyone wants a slice of the silver pie, but there's not enough pie to go around. And I feel by the year 2025, 2026, like Peter Krauth is saying, I feel then it will not be able to be swept under the rug. So Peter Krauth, editor of Silver Stock Investor, provided his latest thoughts on the silver market, honing in on his theory for why the metal's price hasn't risen in the face of substantial deficits for the last several years. Speaking at the Prospectors and Developers Association of Canada, the PDAC convention, he acknowledged investors' frustration with the metal's price. Despite 4 years of consecutive supply shortfalls, it has largely gone sideways. And I quote, "You've got 3 aspects to this," Peter Krauth explained. You've got industrial, supply. This goes to users that make solar panels, that do electronics, all sorts of things like that. You've got the investment side of it, so people who are actually buying physical coins and silver. And then you've got sort of this area where when there is an oversupply in a given year, that gets shunted into inventories of things like futures exchanges, exchange-traded funds, ETFs, for example. Continuing, he said silver's being drained out of these inventories, which he referred to as secondary inventories. And I quote, "Here's my take," Krauth said. "I believe that you have numerous industrial consumers buying long futures contracts and or buying silver ETFs and then asking for delivery. When the futures contracts mature, they can stand for delivery." He noted that registered silver, metal that is available for delivery, has declined by about 70% over the last 3 or 4 years. And in his view, it won't be too long before there's no more of this silver out there. "If I had to guess, I would say maybe a year, 18 months, 2 years max," Krauth said on the sidelines of this event. "At some point, there will be no more secondary silver available. Someone's going to stand for delivery on a futures contract. They will be told, sorry, we can't deliver. We're going to have to pay you out in cash." Why is this so important? Because that will be exposing the COMEX facade, which I have been mentioning, why silver is 1, suppressed, and 2, why it will not be suppressed for too much longer. This is how they can hold down the price. This secondary silver, this imaginary silver, is non-existent, but they are portraying it as it is. So if you hold that contract on the COMEX and it says that your silver is in a vault somewhere, it's not really there. They pretend it is, and the price is going off of as it is, but that's a facade. And he's saying if everyone started to turn these contracts into physical and say, okay, I want my silver, where is it at? Then that would force the hand, exposing the silver shortage. They will not be able to do this corruption, this illegal corruption anymore. And this has happened before. Last time, well, not the last time, but the biggest situation was the Hunt brothers. They bought all the silver on the COMEX and they said, give me it, turn it into physical. The banks were like, oh crap, no, we what are we gonna do? We don't have that silver. What are we gonna do? Oh, we'll just ban silver. We'll just ban it. Just ban it. Let's just make some random law on the spot and just ban silver. Just don't let them buy it. Just, nope, no more buying silver on the COMEX. Nope, nobody can buy it. Nope, give it to us. Can't sell it to your friends, no dealers. Nope, give it to us now. And it worked. Silver went from $50 back down to like $5 after they banned silver. Silver Rule 7, look into it, which led to Silver Thursday. But another instance, though, is the nickel market. And we're going to start seeing this is where people will ask to turn their contracts into physical and there will be delays. Or they just straight up won't let you turn it in. They will settle in cash, like he's saying. And when that finally wakes up, when it's finally exposed, when the COMEX corruption or when the COMEX collapses, that's when silver's price will be able to naturally take its own shape. Ted Butler is the best at breaking this down. I don't even like trying to paraphrase or even try to explain the depths of COMEX corruption or how this works. I always try to recommend people to just check out Ted Butler's work, his research. He does a phenomenal job at breaking down the layers of this corruption and how deep it really goes. And he is extremely bullish on silver, and that is because he knows the extent of what the prices do, or he knows the extent of how suppressed the price really is. When we look at silver, you cannot look at it for its price now, because the price now is an illusion. The price is so distorted. I don't even know if you watching this video understand the extent. This article breaks it down perfectly. It's talking about the case for $5,000 silver. Just listen to this. Listen to this. If the price of silver were based directly on the real physical market, silver's price should be at $5,000 an ounce. I'm not saying the price of silver will reach $5,000 an ounce. He's saying that the actual physical silver spot price is not only extremely undervalued, but that it is an illusion compared to the real value of an ounce of physical silver, since it is totally disconnected from reality. May seem totally crazy, $5,000 silver, but who can pretend knowing exactly how an ounce of silver is worth after decades of manipulation, turning real investors' demand from physical markets to the paper one? And when he refers to the paper one, he's talking about the COMEX, how 70% in the last 3 or 4 years has been drained, and how this illusion, the facade, the distortion, the disconnection from silver's physical price or physical market to the paper one is starting to get exposed. And when it does, Peter Krauth says, the markets will finally wake up in a big way. And this article is mentioning technically it should be $5,000 silver if this was the case without all this corruption. Now, why $5,000 silver? Well, they're going off of the 250 to 1 ratio. This is an actual mathematical equation that uses the entire silver market to the physical market. So what they're saying is Bloomberg says that the global annual silver market is $5 trillion. According to David Morgan, the annual physical silver production is roughly 1 billion ounces. So with silver trading around $20 currently, this represents a $20 billion market for physical silver. So the size of the physical market is 20 billion. So here you have the difference between 5 trillion and 20 billion is that the 5 trillion number represents the entirety of the paper silver market, including all paper financial products, certificates, options, ETFs, derived from the real physical market. So the 5 trillion number is all the extra BS paper that they're saying is included in the real market. But the only real market is the physical, so that allows investors to be exposed to silver. So here we go. This is what you really have to understand now that I broke down the difference between the physical market and the paper one. So the above discrepancy makes for a 250 to 1 ratio between the paper market and the physical silver market, meaning for every ounce of physical silver, there are 250 ounces of paper silver circulating in several financial products. In other words, only one contract or certificate issued out of 250 could be convertible into physical silver. That is the market being leveraged 250 to 1. That is important. That's why I always say if you can't hold it, you don't own it. So let's hypothesize that silver would be directly based, or the price would be directly based on the physical market. So they do the 250 to 1 ratio. The market's $5 trillion. 5 trillion divided by 20 billion is 250. 250 times 20, which at the time of that article was $20 spot price. It's $5,000 an ounce. If you want to use silver spot price today, it's around $6,250 an ounce. So even more. So that's where I'm really trying to stress people invest in the physical. Right here it says in the conclusion, every investor holding silver in the form of financial products without possibility of verifying the physical existence of their investment should ask the question as to what will happen when more holders of said products will ask for physical delivery. That's what Peter Krauth is saying. What's going to happen when everyone or more people try to turn in their contracts for physical delivery? In reality, we already know what will happen because one of the largest banks from Netherlands already defaulted a little more than a year ago on its gold, settling in cash. And that is exactly what Peter Krauth is saying. They're going to pay you out in cash. And he's saying a year, 18 months, 2 years max. Because there will be no more secondary silver available. It will get exposed. Anyways, folks, I really hope you enjoyed this video. I wanted to just really say thank you all for the immense amount of support. 100,000 subscribers is a huge milestone. I have busted my butt for almost a decade. I'll say 8 years. 7-8 years. Let's 7-8 years. But I've put my heart and soul into this channel, and it goes a lot deeper than a lot of you know. If you've been here since the beginning, maybe you know, but my dad died 3 years ago. My mom got diagnosed with stage 2 breast cancer during the same time. I'm a single father. I have a 3-year-old daughter. A lot's happened, but you guys literally are what kept me pushing. I just want you guys to know, like, you guys are like family, and it's very personal. So I really appreciate you guys, and giving you guys silver, whatever, is the least I can do, or jumping out of an airplane is the least I can do. So yeah. Anyways, I don't mean to get all mushy gushy, but I just really wanted to say thank you all, and I'm going to continue making videos and making better content for you guys. So thanks for tuning in. This is Silver Slayer. I'll see you guys tomorrow. Peace.